but you need to hire long before you need it, you know. And if you said to somebody and they really want to be there, to your point about giving them a week-long task or something, if they really want to be there, if their start date is this month or next month, it probably doesn't matter too much to them, you know, as long as they know that you've given them a commitment and that's their start date, here's their employment contract, here's what they're going to be earning, and here's the role that they're going to be in, and here's the support they're going to be getting. Most people are happy to do that. They'll stay in them, you know, if they're miserable in their current job, they'll stay for one more month if they need to. Hey, it's Julian. I'm the CEO and founder of LoanOptions.ai, and today I've got another tech guest, a very special guest, a good friend of mine. I'm here with...
Hi, I'm Angus. Do I talk to you or do I talk to the cameras?
Talk to me.
All right, cool. Yeah, I'm Angus. I'm one of the co-founders of Quickly. So we're a mortgage broking research tool. It's probably one of the most boring tools you can imagine if you're not a mortgage broker, but extremely exciting for mortgage brokers. We save brokers a lot of time and hassle.
Yeah, captured the mortgage broking industry by storm would be an understatement. I think you've got, you know, roughly nearly 50% of the mortgage brokers in the market use it now, right?
Yeah,
maybe more.
Yeah, it's kind of hard to measure, but yeah, somewhere around there. Yeah.
Yeah, which is incredible. I mean, as far as I'm concerned, I'm obviously a fan. As far as I'm concerned, if you don't have Quickly in your business, if you're not utilizing it, I think you're being left behind, because this just saves so much time. But I'd love to rewind a little bit, you know, because this is obviously a tool that a lot of people are using now. The industry's been crying out from it for something like this for a long time, and a lot of people have had cracks at it, you know, albeit haven't done very well. And you guys just came in and just seemed to get so much right for so many people. Tell us the story. Like, where did the concept of Quickly come from?
Yeah, I mean, the reality is that it's not the most original idea. It's a tool that every mortgage broker needs. So for anyone who doesn't know what Quickly is, fundamentally what we tell brokers is how much can your client borrow across your suite of lenders, and it's a capability that all brokers obviously need, but it's not so easy to solve. So maybe I'll, you know, just go back to the origin. So my business partner, Eric Dill, we'd been mates for 10 years. When I first moved to Sydney, I moved into the warehouse that he was leasing. And so we'd been mates for a long time, and I'd worked with him a little bit before. And he kind of we both have engineering backgrounds as well, so we're both pretty mathsy kind of people. He took his career down, you know, pursuing a handful of small businesses. He ended up starting a mortgage brokerage, and he'd been doing that for 5 years or so. I took my career down a more tech focused path, and so I started out writing software, and, you know, getting into product management and just kind of working in the startup ecosystem. And one day, and where I was in my career at the time, it was just at the start of COVID, and you know, our company was doing hardware stuff, and it was just an absolute cluster. It was a real rough time to be in that space, and I was doing well in some respects. I was a little bit out of my depth in some respects. It was all very new territory, and it was a pretty you know, it was pretty scrappy. And Eric called me up one day, and he was like, "Hey, I've got this business idea. It would be building a serviceability calculator for brokers. What do you think?" And I was like, "Dude, I'm in." And I basically quit the next day. I didn't really quit. I was having a child, and so I just took a year's kind of maternity leave, and, you know, looked after the bub and worked on this on the side. And so, yeah, I was really into it, and it suited me as well because it was very mathsy. It was very you know, we had to deal with a lot of numbers, had to have a real focus on mathematical precision, and ultimately, one of the gaps we recognized in the current market was that this system had been built many times before. But ultimately, where all of the systems fell short was brokers couldn't really trust what they were seeing. And the thing about trust is, particularly trust in a platform, trust you win it in drops and you lose it in buckets. And if you can't trust the numbers you're seeing, then it would be irresponsible to kind of base any meaningful decisions off, that platform. And so we kind of came in and thought, let's start small. Let's kind of get this platform working for a small handful of lenders, for fairly simple scenarios, and we'll go from there. And so that was kind of how we started out. And I think fast forward about 18 months or so, and we went live with our platform to brokers, and we kind of just hit the nail on the head off the bat. And we had that real focus on, I guess, trust and all the things that is required to build trust. It's not a simple problem. And yeah, brokers love the platform, and brokers are a great customer to have because they talk to each other and they have really tight communities and state-based conferences, and there's lots of talk that happens. So if you can really solve someone's need, then brokers will share that with each other. It's not a zero-sum game. Brokers are out there to help each other by large part.
I certainly agree with that. We kind of liken it to two different mentalities, right? There's the famine mentality, which is that zero-sum game you're talking about, and then there's the abundance mindset or mentality, and that is like together, instead of thinking there's only one piece of pie that we all have to share, we can actually bake more pies together, and really who they're competing with is not each other. It's actually the legacy institutions and the big banks when clients go and pay the loyalty tax by going direct instead of using a broker. So from that point of view, like, it makes so much sense. And to your point about how many people tried but failed, it's like execution is everything when you're talking about technology products.
Yeah, big time.
And it doesn't matter how good your concept is, it doesn't matter if you're first to market, it doesn't matter if you're last to market, the execution will ultimately decide whether the product is successful or not.
Yeah.
And trust, when you're talking about serviceability, if you're $1 off, it could make or break. If you're $10 off, it could definitely break. And the fact of the matter is, in the rising rate environment we're currently in, brokers probably come to rely on your product even more so because the serviceability is getting harder and harder and tighter. So going from, let's use an example, let's say $800,000 loan. Let's say clients earning 100K a year, 150K a year. The difference between the lender that they can borrow the most with and the least with, say the lender most might be 800, the lender with the least might be 600. It could be a couple of $100,000 difference or more. Like, what's some examples you've seen?
Yeah, I mean, I can't run all the math in my head, but I think from what I've seen, those vanilla scenarios where it's just that you have one or two people with no kids, earning, between 80 and 120 or 30 each. Most of the lenders, there's a fair bit of alignment between what lenders are willing to, lend. And so there might be in the simple case, there might be 50 to 100K difference between lenders, but you don't have to throw in much policy for the difference to become quite exaggerated. For example, if there's HEX or if there's notional rent or if there's
overtime, or
or if they're self-employed or anything like that, you start to get some pretty drastic differences between lenders. Actually, it kind of reminds me when we're in the very early days of building quickly, we started with PAYG. Well, all right, let's make it work for a few lenders, and then we added bonus overtime, pretty obvious, and then every kind of policy angle we added into the platform, it would just open a massive can of worms, and we would be defeated, and it would take us ages to work out, all right, how do we even think about solving this problem, let alone, and how are we going to solve this problem for the people we have and for other systems in the future, and we're kind of working on policy, and it was pretty rough. But the thing is that every time we overcame one of those challenges, it bolstered our confidence in that, all right, we can get this done. It's going to take time. We can build this. And it became clearer and clearer to us why this hadn't been solved before, because it's a massively painful challenge, and you can't just say, hey, go solve this problem. You need to really, really care, and you need a lot of context. You need to kind of understand how the person using your platform is going to interact with information. So there's a lot of just getting the numbers right is one thing, but getting the user experience right, and the whole platform right. So there's a lot of communication in that trust building exercise, because you can just look at a number, and if we're not doing everything we can to kind of say, hey, we've considered these things, but we haven't considered that, because you can never consider everything. If you don't get that communication piece right back to the broker using the platform, you can lose trust really quickly. And so.
And what sort of expectations do they put on you? Because, the thing is, when your product is so accurate and people rely on it and you build that trust, then what can happen is sometimes they can put, extremely high, or you probably have them for yourself, but they have extremely high standards of what they are expecting from you as well. And so I know that, when lenders change policy or change rates or change anything really, it's like always a scramble to try and get the platform updated. But,
yeah, that's right.
What's that process like? Because I imagine that's probably
that's one of the pinch points. And again, that's something that, we just need to be very much on the front foot with. So as soon as we know, if we know beforehand that there's going to be a change, we can kind of shut that lender off, that night, and say, hey, lender X is out of action until, we have this system back up and running again. And so if ever there's policy or rates or kind of some serviceability metrics that are out of date, we make it eminently clear on our platform that, hey, here's an indicative number, but it's not up to date. And so be careful. And so
that's the trust part, right? It's like, hey, a lot of people would try not to draw attention to that fact, but the fact that you're leading with that, saying, look, it's still there so you can do a basic calculation, but understand that they released an update yesterday or whatever.
Yeah.
So this is not going to be...
Yeah. Ultimately, yeah. And I think there are so many things that can bite a broker in the ass when dealing with lenders they're not super familiar with, or kind of dealing with new policies, or, changing SLAs and things like that. There's a whole barrel of things that a broker needs to be kind of double checking for and making sure that they've covered. And so, one of the biggest pieces of value that our platform offers is we do everything we can to help brokers not get stung by deals. And so there's a fair bit of balance in saying, hey, if there's a number that a lender might use, so hey, they might consider this, but you need to double check with your credit assessor, based on circumstances. We try and be upfront about that. And, whenever there's anything out of date, we need to, if we can fix it, it'll be fixed within an hour. And it's usually not the case that we're fixing it. It's usually that it just takes time for it to get back up. But yeah, it's a delicate balance. Ultimately, if we didn't have a dedicated team of kind of talented, interested, curious people, kind of keeping their eyes on this thing and executing all of these changes, it would be a very hard thing to do.
Yeah, I would argue it would seem like an impossible task if they didn't actually care.
That's right.
Or if it was just a job for them. I think you really have to care very deeply to get, because the difference between something that's good and something that's great, or as close to perfect as you can possibly get, is like people actually giving a fuck. Like that's the easiest way to describe it. I'd much rather use softer language than that. But I think it would not make my point as clear as like the difference between a good product that is it's all right, and a perfect one is the difference between it being a successful business and not. So you really need people to buy into the vision and understand just how much this product being accurate is important to the brokers. And
that's right. And I think I mean, Eric and I, we are still very much at the coal face of our business. We're always trying to figure out, all right, how can we make ourselves a little bit more redundant? How can we upskill our current team members? Where every customer issue that comes up, we've got our eyes on it. Every kind of policy change that happens, we're kind of across it. And so, our business, we haven't yet reached the level of maturity as a business, as a product team, for us to be able to kind of step back and just let the whole system glide. We can do it. We can do it for a week or two. But yeah, we are still very much, in the thick of it.
Well, there's parts of that that's probably by design, right? Yeah, because I think, there's a lot of, good leaders that will say if you're too far removed from the granular details that are in the business at the coal phase, then you're not going to be able to lead, because you're not going to be adequately equipped to know exactly what's going on, the problems that your engineers are facing or your product team, and then you've got the other side of it is if you're too far in the weeds, then you're not going to be adequately equipped to actually lead the vision of the business and the larger big picture side of things. But
it's a hard thing to balance.
Yeah. And I think being comfortable enough to step away for a week, 2 weeks, and know that the whole place is not going to burn down. It's a good place to be in. But I think as well, as the business does get a bit more mature, you're going to start to find people who perhaps might be able to do things better than you, and then you're like, well, be my guest, do it. I'd rather be on the golf course, or whatever, powerlifting.
There's nothing more satisfying than having a team member really come in and outperform what you could do. That's really, really cool to see that.
It's the best feeling ever,
It is. I mean, there are lots of things in the business. Like Eric and I, we've always taken the view that in order to be able to kind of outsource effectively, you need to understand, the nuts and bolts of what's required in a certain task. And so, we don't want to just hire a marketing agency without wrapping our heads around everything that's required there beforehand, because then we won't really know what we're spending our money on. We don't want people looking after this part if we don't understand it. And so, I don't know how much we've hamstrung ourselves by kind of taking on all of that ourselves. I mean, to be honest, I don't think we have. I think it just makes it a little bit harder and a little bit less urgent to hire into roles that you can do yourself. And so there's a bit to balance, but we're figuring it out. We've got, and we're in no major rush to figure this stuff out. We've got a pretty solid business that's humming along. We've got a good team, and we're on a positive trajectory. And every time we've made a bad hire, it's always felt rushed. And so, it's kind of, it's a tough thing to get right, building a team, hiring people.
People don't understand how much effort is involved in getting it right. It's not just put an ad up and interview 5 people and then pick one. It's making sure that there's a lot of clarity around what you need from that role, and if it's this type of role or that type of role, do we actually need that, or do we move people internally? There's actually a lot of work to do it properly, and to do it properly, you really need to interview probably 15 or 20 people, and then shortlist, and then keep shortlisting, and keep track of every candidate, and what the outcome of that interview was, and there's some kind of scorecard. We use a scorecard and kind of rank them on different areas of where we think, and then give them a skills assessment as well, because the thing about sales is it's really hard to give them, you can give them something to sell. Some people go, oh, sell me this pen, but that doesn't tell you if they're going to actually be able to sell your product, or if they have the gift of the gab and not necessarily a large part of sales is actually the process, right? It's not just whether somebody can talk the talk. It's like, can they back it up? Can they follow up properly? Can they set tasks, reminders? Can they execute?
Do they have drive?
Do they have the drive? Are they going to be someone who needs to rely on motivation, or are they disciplined? Because the discipline beats motivation every single time. If you just go, this is what I do on a Monday morning, I ring this many people, I do this many tasks, I follow up this many clients, that wins over whether you're motivated and excited to call and pick up the phone, because that's going to go and come, right, in everybody. But yeah, then there's also the part of, like, with an engineer, you can actually test their skills, and there's different, programs and online sort of tools that you can use that kind of protects them from being able to, or it prevents them, I should say, from being able to get somebody else to write the code in a skills assessment. You might give them a list of tasks that they need to do, and then you kind of review their code and see their strengths and weaknesses, right? So I like the idea of giving them a skills assessment. That certainly seems to help in our business. But that still doesn't fit. You need to look at all of it, and you need to look at all of it properly, because they could do really well in the skills assessment. As soon as you give them a new problem, may not know how to solve it, or maybe you've only picked the skills assessment that goes as far as their skill set.
Yeah, skills assessment, it's interesting. Something that we've seen success with. So we've got a hybrid onshore offshore team. I'm a big believer in, particularly for kind of product teams, and when you're building UIs and the UX matters, of having everyone in the office, because there's a lot to be gained from, a few people huddling around someone's screen and talking about this and talking about that, and getting kind of product and design and engineering all kind of working together and on the same page and kind of sharing that. And so, but we've got a handful of things in our business that are kind of a little bit easier to carve off into, say, hey, here's a responsibility. And if it's easy to measure outcomes, it's easy to carve off, I guess. And so there are some things in engineering that, we've carved off a few teams to attack this and attack that. And for our offshore hiring process, we give people a week-long paid kind of task. And look, if they have to cheat to, nail their week-long task, I don't care what you do, because, if you're doing a meaningful piece of work over a week, that's just keep doing that, and you're going to be successful in the role.
Yeah.
And so
just hire somebody to permanently cheat.
Yeah. I mean, I guess I'm not encouraging that, but it's definitely not really a fear, because, like, who's gonna pay someone else to do a week-long challenge that they're meant to be doing themselves? Like, it's kind of absurd.
They're gonna be found out very quickly.
Yeah, that's right.
That's the thing. You can't really cheat that.
Yeah. And also, our onboarding, that challenge is basically the onboarding task for, it's kind of the first week almost of what they would be doing anyway. And so they come into the role, like ready to go, because they've got all the contexts, they understand the problem, they've worked through the technologies and the fundamentals of how to solve that, and then they can come in and start performing straight away. And so, yeah, we've seen a lot of success in that kind of, it's not at all a hasty hiring process, and it's very, I guess we go through a lot of people in the early interview stages, and we have a lot of people drop out because some people aren't willing to do, a week-long paid challenge. It's a pretty big commitment. But the people that we've found have been, we've only pulled really talented people onto that team.
Yeah.
And I've seen,
that's great, man. That's a very innovative way to hire. I definitely agree that if you can do that sort of thing, you'll get the right people that actually are invested in your business. Nobody's going to take a week out of their life if they don't genuinely believe it's a cool company to work for. Like, I mean, let's say, for example, you get two choices, right? Let's use different companies. Let's say one sells Yellow Pages or something like that, like something really boring, contact list, and one of them's like Google or Apple. If the Yellow Pages company, or I feel like I'm picking on them now, but there's something really boring. That's
Is that
like,
still a business?
No, I don't think so. That's why I said it. So like a business that seems like it's on the way out, and it's like nothing really that exciting is ever going to happen there. Versus a company like Google or Apple or something where, you know, like it's innovative and there's got all this cool stuff, and you're much more likely to put in a week of your time because you really want to be there, right? You really want this other job. You don't, I mean, the Yellow Pages, like if you get nothing else and you need a job, it's probably going to be okay. But sorry, Yellow Pages, if you...
if you're listening in. Yeah.
Not that you would.
No, very significant operators, Yellow Pages. You know, they had a big impact on my childhood, flicking through Yellow Pages.
The other thing is you raise a really good point about taking your time with hires. I think that's a big one, eh? Like if you are hiring when you actually need someone, it's too late. Yeah. You need to be hiring well before you need somebody, because you need to be building your talent pipeline, and you need to have people sitting on the bench like we do all the time. You know, we got 2-3 people, we've got a staggered, you know, okay, we're going to have a chat in January. Here's your employment contract. You're starting in March. You know, like that's kind of how we do it, because, you know, we have, you know, forecasts in place and targets to hit, and these partnerships are going live on these dates, and we've always got stuff in the pipeline, and you just need to make sure that your workforce can sort of service the pipeline of partnerships, etc.
Yeah.
But you need to hire long before you need it, you know. And if you said to somebody and they really want to be there, to your point about giving them a week-long task or something, if they really want to be there, if their start date is this month or next month, it probably doesn't matter too much to them, you know, as long as they know that you've given them a commitment and that's their start date, here's their employment contract, here's what they're going to be earning, and here's the role that they're going to be in, and here's the support they're going to be getting. Most people are happy to do that. They'll stay in them, you know, if they're miserable in their current job, they'll stay for 1 more month if they need to.
Yeah,
you know, not that they want to, or they might stay for 2 more weeks, and then, you know, when they leave, they'll take 2 weeks off and come back fresh. Like they're, you know, there's people willing to do that sort of thing. And but yeah, hiring, that's a really good point, I think. Yeah. What about you know, so you get into this this business, you and Eric, you go, you know, all in straight away. How long is it before you realize you were onto a winner? Like how many subscribers, or like what was the metric that you use?
You know, really, really funny actually. So we launched in, what year was it? 21 October. You know, we might have had a few, I think we had, you know, a few hundred people sign up, you know, during September, and it was just free. So we made the platform free. We kind of recognized that, you know, brokers are busy. They're seriously busy. And particularly the environment at that time, brokers were under the pump.
Yeah.
And I think it was when, you know, reserve rates were hitting zero, and, you know, fixed rates were starting to get really low, and brokers were under the pump. And so we made our platform free, and we recognized that, you know, in order for the product to be a success, we needed to make the kind of friction to, you know, the sign up friction as smooth as possible. It's like we need to minimize that friction. So we you know, were very adamant about having a free trial, and really part of the pitch was, hey, you know, next time you're looking at servicing for a tricky deal, just sign up to the platform. You'll be on there in minutes. And you know, you'll be able to kind of answer this one question you have faster than you would have otherwise. And so we're only additive. You know, there's no investment time required really. Anyways, so, you know, our first couple of months it was just completely free, and I think we got up to something like 800 weekly active users or something, and then we made it paid, and that flicked over. Start of November was, you know, you had to be on the paid platform, and then signups just dropped off. And me not coming from, you know, financial services or broking background, I remember looking at that chart every single day, just like stressing, like going, oh my God, I've just invested like 2 years into this business that's going into the dirt. And so we hit, I think we bottomed out over the Christmas New Year's. I knew Christmas New Year's was going to be slow, but I didn't realize it would start to slow down in mid-November, and it would only start to ramp back up in January, February. And so I think brokers had such a hard time that they were just like switched off for all of summer. And so, you know, during that slump, it was pretty rough. But when we came, you know, we hired a few people. Then we kind of doubled down. We hired a few people. There was a few features like our data export feature that we push data into, you know, these lender spreadsheets just to, you know, simplify that. Basically,
because otherwise they would need to rekey the data.
They would have to rekey the data, and man, in the early days,
worth the subscription.
In the early days, we would have 5, 6, even more, you know, discrepancy reports a day of brokers saying, "Hey, your system's wrong," and we were like, "No, you just put in the wrong cells. You put in the wrong numbers. You know, it's 100,000 here and 90,000 there, or 5,000 here and like 5,200 there." And so we almost did it just to get people off our backs and, hey, just do the export and you'll figure it out. And, you know, so we launched that, I think late Feb or something. And, you know, combining the year kicking off again with that product launch, you know, the sign-ups just took off. And, it was around about then that we just saw consistent growth. And we've basically seen fairly solid growth since then. Yeah.
Amazing, man. That's awesome.
It was good.
And so it was probably around 2022, around February, March, that you felt like, okay, we're onto a winning year.
It was April. It was April that, maybe March or April, that we really knew. You know, that it's
that's so recent, you know, too, man. That's
I know. It was we kind of just nailed product market fit off the bat. I think. You know, Eric, he's a really switched on operator. He's a solid broker. I'm pretty good at product. And, you know, we just checked everything off, and, you know, we knew we had to execute and we knew how to do it. And and we did. And, you know, brokers really responded to that.
Yeah, it's an amazing story. And I obviously seen you, at some of the events, the industry events and stuff like that, and just watching, all the people just glowing feedback back to back. It's like, you know, to me, it is product market fit in the best, like that's one of the best examples I've ever seen. Very rarely will you see a business in our industry get that much market share. Very rarely. And so you guys, I mean, hats off, absolutely amazing story. And to think that you're coming in, you know, kind of, hey, what about this idea? And you're like all in, you just like leave the job, take leave, you know. Always love those stories.
Good. I mean, Eric was such a good mate as well. I remember, you know, when we first met each other, it was something we'd said, you know, probably 15, no, maybe not quite 15 years ago. It was like, hey, one day we'll start a business together. And so that was always in the back of our mind, I think. And so cool. when he
and your dynamic with him is really cool, fun. Like if people haven't kind of seen you together, you're probably like, oh, what's going on? But like a bit of banter and like it's good.
Yeah, we're good. We're good. I think Eric, we're really good mates. I think, you know, there's always a big risk starting a business with a mate. You know, having any kind of a business partner, it's rough. Well, it doesn't have to be rough, but it's if you're gonna weather tough seasons and kind of business strain, that put a lot of pressure on our relationship as a friendship, you know. And you know, in order to get that, you know, for us to build our business partnership the way that we have, you know, we've had to weather a few kind of, you know, pretty hard chats, but we've got through it, and you know, we have an extraordinary amount of trust in each other as a result of that. And I don't know, I guess that's something that can't really be overstated, is, you know, how much work and effort goes into building a solid business partnership with someone. And also, you know, you need to be so open and vulnerable and like have the other person's best interests at heart if you kind of expect that to be reciprocated. And so it's been a pretty big journey for us, you know, as friends, also as business partners. So it's interesting. I guess I don't have heaps more to say there, but that's another big part of the learning.
Definitely being on the journey with someone who you know has got your back. And look, if you think otherwise, it probably means you've never been in business before. But if you've got business partners, it's not always sunshine and rainbows. But if you're respectful about it and you get your point across in the right way, and sometimes that you'll disagree with them entirely, and sometimes you'll agree with them, or sometimes you'll feel like it's your fault, sometimes you'll feel like it's their fault. But really, what it's about is doing what's right for the business and the team.
Yeah.
So yeah, I mean, it's never like all sunshine and rainbows. You always kind of see the successes and things like that on LinkedIn and whatever else, because it's what people post. But the reality is a little bit different to that, and it's not that people post a fake sort of reality on social media. It's not. It's just that most people wouldn't understand, and so that's why business owners kind of sometimes refrain from posting their L's online. You're not going to see.
Yeah.
I mean, look, I thought about it the other day because more recently we've had let's call them haters, but just a couple that's starting to pop up. And when we were kind of on the way up, it felt like everybody was supporting you. And then when you kind of reach a point and maybe there's a few more competitors in the market, like everyone's trying to knife you, everyone's trying to it just feels different.
Yeah, right.
And I was like, make a conscious decision, to be, a little bit more deliberate with what I post, not to make it come across as like it's all sunshines and rainbows. Like put some stuff in there and you'll see it probably more over the next year. Like post the losses, hey, we tried this, it didn't work. We moved on, because I think when people see that, it kind of takes their armor down. It's like, okay, if they're seeing you only win, and they're sort of losing heaps in their career or in their business, it makes them a little resentful, But anyway, so I'm just being a bit more cautious, a bit more deliberate, because people have said that looks like it's just all happening. And I'm like, yeah, you don't know the half of it, but it's like anyway, it's never easy. If it was easy, everybody would have their own business and everybody would have their own equivalent of product market fit like quickly. But it's not easy, and it requires really big balls, to be honest. And there's moments in time where you think, why am I doing this? And there's moments in time where you think it would be much easier if I just went, I'd earn more money. I'd literally earn more money by working somewhere for someone else and not have all the stress of like managing the staff and wages and, all the bills and expenses that come out in especially a sort of a fintech or a tech startup. It's certainly not easy.
Yeah. I think, there's a lot of risk in kind of going out and starting up a business, like putting yourself out there. I think, one of the ways that I kind of, I guess, justified taking the risk was, well, I mean, risk is funny. I think when you talk about risk, often it's easy to go, oh, risk, that means numbers, percent of success. I think one of the main driving factors with risk for me is not so much upside. It is, how much will the downside hurt and what's the chance of that happening? And I think when there's a big opportunity at hand, if you can figure out how to go, hey, here's the downside. If you can reframe downside as upside, then it makes big calls really easy. So for me, I going into Quickly, I thought, look, we could build this product and it could be a massive success, and maybe we'll be able to pay our own wages one time. Wouldn't that be amazing? And on the other hand, it was like, all right, well, maybe I invest a year to 2 years building a product. I put it out there. Everyone thinks I'm an idiot, and goes nowhere. But I'll have learnt a lot. And if I look down the barrel and go, all right, chances are this thing's not going to succeed. Chances are I'm going to, I guess, be a bit of a loser. But I will have learnt a lot, and I'm gonna be able to take that into the next step of my career.
Are you as well saying, correct me if I'm wrong here, but are you as well saying that a lot of the reason why people don't start businesses is not so much of the fear of losing money, but also having, let's call it their
Absolutely, putting
ego
yourself
bruised.
out there. Yeah,
Yeah, you know, like
because
if it doesn't work, then you're a failed business owner.
That's exactly right, and that's one of the beautiful things about, you know, the VC scene. I think VC money de-risks entrepreneurship, so it's good in a way, because you know, you get people who are otherwise, you know, pretty conservative and who wouldn't take big risks like that. You know, if you get funding, you know, you've succeeded in the eyes of your peers. And if the business doesn't make it, you know, there's a well-defined path, you know, defined by the startup industry. Here's how to fail in your startup journey after being backed, you know, in a dignified way. And so, you know, I think for us, and particularly at the time, you know, I had my heart set on, I was like, all right, we're going to be starting a business. And my, you know, exposure up to that point had been, you know, if you want to start a company, you need to raise money. And, you know, because I worked at a VC-backed startup. We shared an office. I shared an office for a couple of years with StartMate, which was a startup incubator. You know, I had friends in the UNSW founders thing, and all the talk is about raise money, raise money, raise money. It's not about build products, solve problems. I mean, they talk about that, but really the thing driving it is raise money. And so I think, you know, for us, we were kind of, I guess we were lucky in a way that, you know, the mortgage broking audience isn't a massive audience. You know, I think there are 20,000 mortgage brokers or so, or 15,000, somewhere around there. And, you know, if you talk to a VC, like a venture capitalist investor, no one really gets excited by a TAM like that.
Yeah.
And you kind of had to bend over backwards to say, hey, you know,
TAM is total addressable market.
Yeah, TAM. Yeah. And so how much money can you possibly make? And so, you know, no investors would really get excited by that. And so, you know, we're always like, all right, let's just get to this point and then we'll talk to VCs. Let's just get our product done, then we'll start talking to investors. You know, let's get our product to this point, then we'll, you know, try and raise a bit of money. But for us, I guess, you know, our product, because we hit the ground running, and, you know, got an audience, like a customer base pretty quickly. You know,
pun intended.
Yeah, pun intended. It became, it kind of really highlighted for me, oh crap, it didn't make sense. And a few of my startup mates had been saying, hey, if you don't need money, don't raise money. You know, don't talk to investors. Just do it yourself. If you can, do. And so I guess that's a bit of a tangent, but, you know, one of the things I've seen people get into starting their own companies who definitely otherwise wouldn't have, you know, because they just, I guess, didn't have the risk appetite. But when they can just pitch ideas, get funded, and then pursue their dream, it takes a lot of the downside out of the startup journey.
Yeah, I think like there was a time where, you know, you could pitch a good idea and people would fund. I don't think it's like that anymore, maybe. But certainly now, you know, you talk to a VC in this current climate and, you know, that they'll tell you they want a profitable business that's high growth.
It's like, all right, well, why are they raising money?
Exactly.
Yeah.
Where are these unicorns you refer to? But, you know, usually high growth and profitability they're not always, usually they're inversely correlated. They're not always, you know, going hand in hand, because the thing is, in order to actually fund growth, it comes at the sacrifice of your P&L. Like you need to hire ahead of the curve, or you need to hire and train people, and they may not be, you know, dollar productive until probably 6, maybe 12 months, depending on the role. And, you know, so anyway, it's, to your point, it's like, yeah, if they're doing that, then why would they need to approach a VC anyway? So, yeah. What's some of the things that have been harder than you expected? Like, let's kind of go there. Like, what was something that you're like, I think we're going to do that easily, and then it would just turn out to be this,
definitely hiring a solid team. Harder than expected. Being a good boss every day of the week. I think there's definitely a direct correlation between, how well slept I am and how easy I am to get along with. So that's definitely, that's a vice, I guess. That's something I need to get better at. Yeah, I don't know. I think that's probably one of the main things.
Yeah, those are two really, really good things to mention anyway. I mean, like the recruitment thing, we spoke about that. I mean, I could talk all day about that. It is the most important. You bring...
Can I take some water?
Of course you can.
Have you sipped from that cup?
No, I haven't.
Okay,
Yeah,
cool.
so
I just smashed the whole cup. So, yeah.
You could talk all day about it because, if you bring the wrong people into your business, it can create a really toxic environment. If you bring underperformers in, it can actually put a lot of load on the other, good performers in your business.
Yeah.
And, there's a lot of things that can go wrong. So that's important. And then the other one is, how do you be a good leader, 24/7? And, it is really hard because all the good work that you do and all the respect that you build up and the trust and the courtesy that you show people, you can undo it really quickly with an outburst. I've seen a lot of leaders do that, and sometimes it's really demotivating when it's like, I've just put in all this effort, to try and impress you or Eric or, whoever, and I just did this, and then, they just kind of had this moment and, but at the end of the day, you just got to, you're not always going to get it right, but you got to be super quick, right? You probably realize this. If you're super quick at realizing when you screwed up and admit that you're human. I've screwed up so many times, man. And the thing that I always say is like, I'm sorry, I'm still young. It's not an excuse. It's just, I'm not always going to get it right. You can't expect me. I am human. You can't expect me to always get it right.
You can expect me to get it right, but forgive me when I don't.
Yeah. It's
tough. It's
tough.
I guess it's, everyone you work closely with, there's definitely that difficulty there's some strain in building a relationship. I think in building any good relationship, it's never really easy. It's having solid relationships when everything's up and to the right, positive, green. But the strength of a relationship really gets tested and defined, I think, in the tough seasons. So when you're not your best and when someone's not their best, and it's like you have a shitty interaction with someone. If you can address those and work past those with your team, you can build some really strong relationships. And so it's almost like a business partnership or your relationship with your wife. They are the extreme examples. Like you need to get those relationships right, and really those relationships are only hard when things aren't positive. If money's tight, things are always hard with your wife. Or if
there's some ridiculous statistic about that as well. Like the reason for most divorces is even a lot of domestic violence situations are actually driven by a lack of money or it's sad.
I mean, honestly, when in the early days of Quickly, it's probably when my relationship was at its worst because there wasn't much money at all flowing into our household, and so every dollar is scrutinized, every kind of there's just a lot of pressure to get everything right, and it also makes it hard to kind of define, like to see a path out of that as well. So things being down is fine if it's temporary. If you don't know it's temporary, you're like, what are we going to do?
It just feels like the walls are closing in, right?
Yeah,
like
that's right. That's right. And so things get tough. And so I've known this with my relationship with my wife, but maybe it's something I need to focus a bit more on with my employees is look, things might not be moving at the pace we want now, and things might not be and maybe we had an unhelpful interaction, or maybe I wasn't my best, but hey, we're all in this together. You know, I'm committed to you. You're committed to the team. You know, like let's keep our eyes on the path to success. And you know, we're doing pretty well now, but let's keep our eyes on the path. All right, how are we gonna make this the best team you'll ever have worked in? And you know, how are we going to, you know, really, how are we going to get you from this level to that level? And yeah, I don't know.
What about the flip side of all of that? So what were things that you thought they're going to be next to impossible, and then you guys breeze through it? Not much.
I don't know, man. I don't know. Do you have an example?
God. Honestly, I don't think there's much. When you're running a business, there's never anything that turns out to be easier. It's always things that turned out to be harder.
Yeah, I mean, there are things that I thought that were going to be impossible that we eventually got through. You know, like, you know, various technical problems, I guess, and you know, when you're like your business partnership is kind of when there's tension there, and working through those things, you know, when they seem insurmountable, I guess as an example, and you know, working through technology problems and kind of, you know, there's been a few things, like a few features that we've built where, so for example, we've got a funding position calculator, and we've also got a product comparison thing that's we're about to launch that. And for both of those, we kind of, we compared you know, hey, here's what everyone's doing at the moment, and it seems broken. It doesn't seem like the optimal way of doing it, because they need to go back and forth. They need to check this and check that and cross-reference, and they're guessing a bit, you know, they're trying to guess what the optimal path is. They're not, you know, mathematically solving, hey, here's the best product. And so, yeah, I guess there's been a few product problems that we have just, we've really questioned the fundamentals, and, you know, not accepted anything less than, you know, perfection, I guess. And so even when we've spent months building and engineering some solution, if it doesn't kind of address what we think is the core issue, even though we have no idea how we're going to overcome that, we've never been satisfied to kind of launch mediocre products. And so I guess on the technology front, you know, the big thing has probably been, you know, sometimes there are just UX issues or product issues that I can't imagine a way around, but I guess I have confidence that we're going to get there. And you know what? They're never as easy. Well, once you see the end solution, you're like, oh, that's so simple. It makes so much sense. Yeah. But the path to getting there is never easy. You know, there's a lot of banging your head against the wall.
Yeah, it's interesting because when you said, oh, what about some examples? I was like, yeah, I'm sure there are some, but God, they seem few and far between to find the things that end up being much easier. You know, some technical problems and that kind of thing, there's always a way, and I've always had that mindset. And every time someone tells me something can't be done, I'm just like, there's a way to do it. You haven't thought about it yet or whatever. And Nolap in my team is the king of finding a way to get something done. He'll stay up all night. He'll do everything that he can, and he'll just find a way to do it. And he'll never say that it can't be done. He's got the same mindset as me. It's like, just because it hasn't been done yet doesn't mean it can't be done. And that's the kind of mentality that you have to have. I really think you have to have that. Because
particularly if you're trying to innovate, if you're trying to kind of
lead,
tread on unbroken ground. Yeah. If you're trying to lead and do things that it's easy if you're building a platform to just go, all right, we need to solve a problem. Here's 10 people who have solved this before. Which one do we want? That, you know. But when you're trying to invent new user flows or interactions, and you know, you have novel constraints or considerations, you know, you need to go back to fundamentals and you know, work through it. And it's really important to have, I guess, trailblazers, like trailblazing engineers on your team who can, you know, really flesh that stuff out.
Yeah, and sometimes people do things to band-aid solution others. And there's one example in our team where we were getting leads come in, and if the client's still on the website completing the application form, you almost want to let them go, right? You want to let them see how far they get before they abandon, and then obviously we call them and kind of solve the rest of the application with them. But, you know, we worked out that basically in the previous version, you know, it's taking people between 10 and 15 minutes to do the application on average, some more, some less, but we basically had to set a cutoff point, and so the distribution of people was going to be, okay, let's give them 15 minutes before we try and call them. And at the 15-minute mark, we'll then allocate the lead for them to be called.
What, so you call them during the application? While they're plugging in data?
Well, we didn't want to do that because people were getting annoyed. They're like, hey man, I'm still on the website. Like, can you just like, let me do it? You know? Yeah. And we didn't want to do that because I mean, it wasn't a big percentage of people that got annoyed, but it's like, if they're going to self-serve and you're going to build this great technology so they can self-serve, you may as well let them try and self-serve, and then you just be there to come in at the last minute if they need you. Anyway, so we built this automated lead allocation tool, really sophisticated lead allocation, because nothing else in the market could do what we wanted to do, so we just built our own. And there was a 15-minute, there's that 15-minute delay that we built in. And like, okay, so it doesn't get allocated for 15 minutes. So the deals just sit there and then it gets allocated. I was like, why did we do that? Why did we do that? That seems like it was because like there was one problem to solve and then we solved it, and then there was another problem and then we solved it, and that's kind of where we ended up. But then when you take kind of go back to first principles, like what first principles thinking, like what is the core root of this problem? And then we solve that, and then now it allocates immediately. So it doesn't mean that the broker has to call them, but it allocates immediately. And the broker knows, okay, well, you know, I can call after this time frame or whatever it might be, and I'll move into a different status when they stop, you know. So there's so many different things, but when you really break down a problem and go back and keep breaking it down, like why did we build that on top of that? And it's like just a whole bunch of things that were built as band-aids to solve other problems. You go back and solve the actual root cause of the problem.
It's hard though. It's hard to identify a band-aid for a band-aid when you're kind of in the thick of things. You know, when you're an engineer looking at code, or a product person kind of looking at the flow, you know, you kind of, me and my business partner, Eric, we have a big advantage because we've been involved in every meaningful decision, you know, that's been made throughout the business and the product. And so, you know, often when we're dealing with things like this, there's just a bit of missing context. And so, you know, one of the things that I'm trying to figure out at the moment is how can I get more of that context, more of my brain and historical thinking into the business. And I think it's only really something you can solve with time. You know, surrounding yourself with really talented people early enough in the journey is, you know, it's not easy to do, but, you know, there's not an easy way around that. You know, because you're going to end up with, so many kind of layers built on top of layers that, I mean, technical debt, it's, you know, it's a word that gets bandied about so much, and it's easy to kind of discount it, but it doesn't just have to be code. It can be in user experience and in, you know, just all kinds of parts of building any system, process, or platform. You know, why is this in the process? I don't know. And so, it's a tough thing to overcome. I mean, we're only like 2 years old, so we haven't overcome much of it. But I guess we're going to be facing that a lot soon. And we're starting to kind of shift, like broaden our focus a little bit. And, you know, our whole product has been really honed in on one very specific part of a broker's journey. And we've kind of been adding things on to the side of that. Well, here's a natural extension. You want to be able to do this. Here's a natural extension. And so as we kind of broaden our focus, you know, we've got people working on, you know, like various different things, and, you know, to understand the why of why are we doing this button like that over there? You kind of need to understand all of the things that led up to it. And so, yeah, it's an interesting kind of place to be in, like broadening your product and shifting your focus. We're not just pivoting, or we're not pivoting at all. In fact, we're just kind of broadening our product.
Yeah. Well, it seems like an evolution, right? It seems like a natural evolution for you to, you do this part really well and people love you for that product. And you still offer that great service, but now you see what other problems you can solve. Because at its core, you're not a serviceability calculator for brokers. You're solving a problem, right? That's why Quickly Successful is just solving a problem. And so if you solve one problem really well with a really talented team, chances are you can solve many other problems. And the other people, like, I've got to be honest, the other people out there solving problems for the mortgage brokers, like, there aren't that many that are, super impressive. How many different, with respect, because I know it's really, really hard, how many different aggregators have tried to build their own technology and had to scrap it after millions of dollars have been thrown at it? How many different, it feels like every event you go to, there's one or two businesses that are just poking through and then they kind of don't quite get it right, or don't get the adoption, or whatever it might be, right? It's really, really hard. But I think the only way you break through is if you pick fundamental problems that haven't been solved well and execute really, really well. That's the only way you'll do it. So I'm confident whatever you got. I know you're not going to probably talk about your roadmap here.
I mean, mediocrity is easy, right? And for a fair few problems, throwing money at it is going to get you there eventually. But yeah, I think the problem domain that we attacked, it had this unique requirement of, nothing less than perfection is good enough. And so I think this specific problem, really required us to go all in on, like nailing this one very specific problem. I think you can make a lot of ground with technology just by spending money, but there are some problems that you really need to commit to.
And really think out like long and hard about how you solve them, because the margin for error, the difference between somebody using your product and not could just be the placement of a couple of buttons in a flow or something ridiculously silly like that. And but how do you find the brokers? Because a lot of the aggregator systems, either they aren't well equipped to handle data being pushed through to them, or they're reluctant to let people push information in.
Yeah, I think aggregators they're in a tough place. All the big banks have so much legacy technology that it's tough for big banks to innovate. And you have guys like Macquarie and other lenders who are who are really leveraging their competitive advantage over the big banks, and for us, and I think there's this inverse relationship. The earlier you build your technology, the more expensive it's going to be for you later in the piece. And so in many ways, being the first to market is not the way to go. Being second to market is pretty good, or being nth to market can work out. And so I think for us, there's probably a combination of, in order to build an aggregator system, a CRM, and to get everything right, you need to do 100 things right. And just doing 100 things right, that's just the baseline. And then you have 100 things on your plate that you need to juggle and balance. And serviceability was always just it was a problem that brokers could solve themselves. And it was never, I guess, a competitive advantage between aggregators. And so there's never been that much, I guess, financial pressure on aggregators to really, really perform. And even now there's not, because, our system works alongside all of the aggregators perfectly. And so
does the information push into
it doesn't. I mean, it does with, we've got some integrations with Brokerage and Effie. We're working on one with LMG. And so, and we want to be working with more aggregators in the future. So we want to kind of make that integration between their platforms and ours more and more seamless. It's kind of one of the key places that we're looking at the moment. And so, because they have so many things on their plate, it's easy to overlook one thing. And when they do look at it, it's such a big investment of time and effort and energy for A, an uncertain outcome, and B, no real advantage compared to their competitors, because everyone has Quickly anyway, and we hardly cost much for brokers at all. And so, I guess, you hear a lot of brokers ragging on the aggregators. Oh, why didn't aggregators do this software? But firstly, they do a whole bunch of things really well. Yeah. And it's a shitty problem to solve. And like it, I kind of empathize with the aggregators. Like they're doing a tough thing, and they're doing it pretty well. Yeah.
To solve such a specific problem, it requires somebody who's actually writing deals, to be involved in the project. Like we certainly couldn't build Quickly without that sort of.
That's right. Yeah, I worked out of Eric's office for like a year or so. Yeah,
to learn it all, and a lot of problems to solve. And look, an aggregator has a reasonable amount of knowledge about how loans get written, but at the end of the day, the brokers actually have more knowledge, because they're the ones that know the intricacies. This lender's better because they sort of sensitize this income by this much instead of that much.
The brokers feel the pain.
They're the ones that feel it. They're the ones that have the real world scenarios that are make or break. Which lender helped them, which lender didn't, which lender had more serviceability here versus there. It's
one of the cool things that some brokers are saying out about our platform is, where they used to kind of sell, they can now tell, right? So if someone says, "Hey, how much can I borrow? What is how much of a deposit do I need?" or like those kinds of questions. Our platform allows brokers to answer those so quickly and in real time that instead of a broker having to kind of say, "Hey, we're going to do so well and we're going to get to the bottom of this problem for you, really fast," instead of doing that, the broker can just solve the problem then and there and kind of help give that person, even more confidence. And so, that's one of the things that, is pretty exciting about, having that real-time impact in the conversations brokers are having with their clients, and kind of giving them, the information that they need to be able to, facilitate a really valuable conversation. It's now at their fingertips. And so I guess, we've gone that step further to make not just kind of information, but, math, I guess, really accessible. And we're letting brokers solve meaningful questions on the fly, which is pretty cool to see, and that suits a lot of brokers, because brokers, they all want to be offering a really premium service, and they want to be giving answers, not kind of trying to pitch how good they're going to be at giving answers. So that's pretty cool as well.
One tradition we have on this podcast is that to wrap it up, I always get the guests to do a 60-second pitch on their product or service. God. So I want you to do your pitch, and then right after it, I'm going to do a very, very short, quickly pitch, because I reckon...
you reckon you'll outpitch me?
No. Not going to outpitch you, but I reckon I've got a good way to...
Okay, all right.
Let's go.
All right, I'm pitching to brokers. All right, here's the thing. I gotta know my audience. Like, I know the product, I need to know my audience. So
mortgage brokers.
Yeah, so mortgage brokers, not just any mortgage brokers, the mortgage brokers who aren't on Quickly now.
Yes.
They're kind of...
they haven't subscribed
they're
yet.
They're your skeptical mortgage brokers.
I've done it for a long time. I know how to do serviceability calculator.
I know it off the top of my head. And that's, that's fine. And you might get it right most of the time. But so my target audience is, I guess, skeptical mortgage brokers. We love that. All right. Man, this sucks. I hate pitching, man. This is why I never raise capital, because because I suck at the pitch. All right. Okay, so quickly solves serviceability for you. Instead of having to guess, you can tell your clients with confidence where their deal is going to go and why. So instead of spending hours, dredging through serviceability calculators, digging through policy, you have all of that information at your fingertips. And when there's something that you doubt or something you're not sure about, our team is right there. We're going to answer any question you have. We've got a team of awesome credit analysts who can address your concerns, questions, and queries within seconds. So we're only additive. You can use us. Next time you go to download a calculator, jump onto our platform and plug in the numbers and test our system. We love skeptical brokers. We don't want you to trust us. We don't want you to trust us without testing us. We want you to question our system, question the depth, and question the experience of our support team. And we'll prove that we've got it.
Amazing, mate. That was awesome. I was just going to say something more simple, like subscribe your bloody tight ass, So Quickly is an amazing product. If you're a mortgage broker and you haven't put a value on your own time, you need to start doing that. You need to look at yourself like a lawyer or another professional, where you have an hourly rate, and this will give you back valuable time and far more time and money than the service costs. So every one of the mortgage brokers we partner with use it and swear by it. And I've got no skin in the game. I've obviously we don't do mortgages, but anytime there's a product like this with blokes running it as good as these two blokes, Eric and Angus, and the rest of the team, actually I've had the pleasure of meeting a chunk of them. I strongly suggest you go and try it and let the system do the talking. Thank you so much, mate. Really appreciate you coming on.
Awesome. Cheers, Julian.
Awesome, bro.